Hi everyone, I hope you're all doing well. Today we're going to be talking about 3 stocks that I've actually sold recently, and I sold 2 of these actually on Wednesday and the other one I sold last week. I did kind of mention it, but I thought I'd actually give a video dedicated to talking through the reasons of selling this stock, because I kind of like mentioned it on the I bought on the JW Pharmaceuticals videos towards the end, just saying, oh, by the way, I've sold Barclays shares. So I didn't really kind of like talk about it that much, and it was quite easy to miss. And I know some of you guys like to know exactly the moves that I'm making in the market. So I thought I'd give it an actual video now, and hopefully like the reasons why I sell might help you guys as well as investors, especially some of you newer guys that are kind of, some of you might have only ever sold like a couple of positions. Some of you guys might have not actually like ever sold a position. So you kind of like, when do I sell out? When do I actually take some profit? So maybe this will kind of help you and, you know, help you make some money into the stock market. So as always, smash that like button and we'll get stuck into the video. So first of all, why did I really sell these 3 positions? So normally every week, and I normally kind of do this on the weekend, I dedicate some time just to run through my portfolio, catch up on a few things with a couple of stocks, see what's going on. Are there still good positions? Has anything changed? Maybe go on to some news articles, see if any news has come out through of that stock for, you know, the last week that I'm invested in. Because it's really easy to get caught up in chasing new stocks and new stocks to buy, and sometimes you kind of forget like about the investments that you made from a year ago, 2 years ago, maybe even longer, depending on how long you've held them positions. And it's always good to catch up and see if anything's changed with these stocks. And I can review my portfolio like every week, once every week, just see what's happened with all my investments and like how much am I up on them positions as well. So there was that kind of factor that played in with a couple of these stocks and seeing that how much I was up at the time. There's also the factor of where the stock market is right now, and I'm a firm believer that when we look at the stock market, we've had the rally over the last 2 months has been insane. You know, we've had pretty much in these last 2 months the normal gains that we have in 3 years. So it's, you know, this is kind of like some amazing gains that we've had. So if you bought down in them lows, well done, because I'm sure you guys have a few positions that are up quite a bit as well, and you're kind of like looking now and going, wow, like it's at all-time highs again now, and what shall I do? So for me, I want to take some profit off the table because I believe the stock market could go down. As well as that, I want to have a little bit more cash in case it does go down as well. Now, obviously, the big thing is that into a lot of these stocks, I still think a lot of these stocks that I bought in that dip, I still think they can go up quite a bit. So I'm not kind of selling every single stock. I'm just selling the ones that I feel like are a little bit up way too much in my opinion. So 3 stocks I identified in my portfolio were these 3, and it felt like a good time to go sell these 3. You know, a lot of people have been asking me like Dark Group, what do I think of Dark Group, Boeing, but them sort of companies I'm investing in for a long time because I think they're going to go up, you know, 100+%. A lot of these companies that I'm selling out of, I don't think they can go up as much, and that's why I'm selling out of them. So first of all, one company was CBRE Group, which is a real estate for commercial properties. So I have sold out of this one previously because I thought like it was kind of a fair valuation, and then on the correction in March I bought back in, and now I've sold out again. Now the thinking behind this one is that I was up 51%, which is pretty good, and I was hoping to make about 70–80% in this stock. So it's really good to like review like how much has it gone up, how much risk to reward. And this is why I always say when you buy a stock, have a target of where you want to sell out of, and then when it goes up that much, you don't get caught out going, oh, maybe I can hold it. You can think back to that time and think, that's where I thought the fair valuation were. I mean, you can always update that and move it higher, but it's good to have a target where you want to sell out. And CBRE Group, I was kind of hoping for like a 70–80% gain on this one, and it's at 50, so it's not too far off. And the big thing for me is the valuation was kind of getting to where I wanted it to be. At the same time, I've got to consider how quick it went up at the time. And as well as that, fundamentally, I think this company's changed. So with it being a commercial real estate agent, I'm thinking, is the real estate going to be that strong for a commercial properties? Are companies want to go and change where they kind of have their offices, the warehouses? And I don't really see companies wanting to change over the next year. I think they kind of want to manage what's going on with the CV. A lot of people are working from home now. So I don't think people or companies are wanting to move to new commercial spaces. I just think a lot of commercial properties are kind of, everyone's going to kind of just play it safe and, you know, not expand, not move, just keep what they have. Maybe even some of them start getting rid of commercial office space because they have a lot of people working at home now. So I'd see like not an expansion in commercial spaces, and I don't see, if anything, I see less commercial spaces needed because of people working at home. So for me, the fundamentals change with this company and the risk to reward as well. So I thought this is one that I'm going to take that 50% off the table. So that's the reason why I sold out of CBRE Group. Next up was Align, and Align basically makes clear braces instead of the metal ones. And they also do a lot of 3D scanners. Now this is one that I've kind of been keeping up to date on over the last kind of couple of weeks, maybe months actually, just seeing what goes on. So Align, obviously with it being kind of dentists and getting them molds for your teeth and the, you know, the invisible braces, I think the dentists obviously aren't open, so that's going to affect the sales of the aligner, the clear aligners that they do have, and also the 3D scanners, but mostly the aligners because people aren't going in to get them really. When a dentist is open, obviously they're going to be limited to kind of like the amount of people that come in. I noticed this from my local dentist. They said that they've got to limit the amount of people that come in now, so appointments are going to be limited. So they're going to have to, I think they're only doing like 10 a day when previously they're doing like 30 a day. So obviously that's going to affect the amount of sales they get from that. Obviously dentists have to leave a bigger gap now to like clean like even like the seat and everything. So yeah, the dentists are not going to see as many people. That means not as many sales. And as well as that, Smile Direct Club have done quite well in this area as well. Now Smile Direct Club have a cheaper product because the patent has basically run out on the aligners now, and they can kind of come into this area. So they've got a lot of competition from them. There's also a Chinese company that's setting up as well using Align technologies. Now there's no patent on it. So that leaves a problem as well for Align, that they've got two big competitors coming in, which obviously as well, they're probably going to have less sales because of the CV and the amount of dentists that can kind of see patients. And because of the two competitors having cheaper products, I see Align maybe having to bring their product down cheaper to kind of compete with these two, because their two products are a lot cheaper than Align. So I see profit margins being hurt potentially on Align as well, which is a little bit worrying. So yeah, Align, I see a lot of competition, margins being hit, and also the scanners. There's a little bit of competition on the scanners as well now. So there's a lot more competition with this, and I see profit margins being hit, and I also see profit, any revenue coming down quite a bit for this one. So now that I'm up 30%, I'm kind of selling out of this one and playing it safe because I believe the fundamentals have changed on this one. A lot of competition, and I'm just going to take my 30% off the table right now and play it safe with this one because I don't know how it's going to manage all these kind of competition, and the customers might not come in as much over the next 12 months. So yeah, I'm stepping away from Align at the moment. And the last one was Barclays that I mentioned previously on the GW Pharmaceutical video. I sold out Barclays for 45%. I mean, overall, when you look, 51, 30%, 45%, they're pretty okay gains really. Obviously, I like to invest into companies for like 100+% gain, but these are all pretty decent gains overall. You know, as long as you're making money, it's not bad, and some of these gains aren't too bad. But Barclays, I sold out Barclays just because it was quite a small position. I don't really like bank stocks because they have quite limited revenue growth, and I just felt like Barclays had just sold off way too much, and I thought I'd see the recovery from here. And yeah, I was like, this is near fair value for now, and I don't want to really hold a bank stock. I don't really like them that much. Sure, you can get the dividend from them, but the actual share price gain that you normally get off bank stocks aren't amazing. I just felt like Barclays had sold off too much, and that's why I bought it. I thought I was going to hold it a little bit longer than this, but hey, I got offered a 45% gain on my share price, so I'm going to sell out of Barclays. So yeah, it wasn't a big position, and for like the research I have to put in, so like keeping up to date with the company, to the position size, and I was on a 45% gain. You know, I thought I'll take that one off the table. So yeah, I only really sold out of Barclays because I felt there was only about another like 10% upside from here, maybe 20%. And yeah, I'm not a big fan of the banking industry anyway. So yeah, I just wanted to take that profit off Barclays and invest it in something else really. So those are the three companies that I did sell out of, and like I said, they're not too bad profit really overall, just that some of them had kind of, I wanted to get a little bit more cash in case there was a pullback or a big pullback in Q2 with some bad earnings on a company that I like, and all of these were kind of up a little bit, and the valuations, like the risk to reward, had kind of like shrunk a little bit. So felt like these were good opportunities now to sell and build up that cash pile a little bit as well. So I thought I'd share that one with you guys because I know like I'm trying to be transparent and show all the moves that I buy and sell in the stock market. So I hope that one helped you. As always, if you can smash that like button, that would be absolutely amazing. Subscribe if you haven't, and I'll see you on the next one.